Global market commercial real estate update. Ladies and gentlemen, it is July of 2023, and I'll tell you guys that right now, we just read the CBRE financial report and economic projections for the largest commercial real estate brokerage firm in the world. And CBRE just announced that its earnings are down substantially by over 57% in the second quarter of where they were last year. And so when you look at that from a publicly traded company, typically alarms go off, right? Red lights just start flashing and you go halt. How can a publicly traded company just report 57% losses in the commercial sector and stocks and feel like they're okay? Now, it isn't that they feel they're okay, but they have projected that there was going to be a downturn. And according to CBRE and their analysts, one of the big things that we should look for as we move through the rest of the 2023 calendar year is a mild recession. The recession that we've been hoping for, and the reason I say hoping for it isn't because we want a recession, it's because we know that it's coming in spite of whether we want it or not. What we just wanted was we want the recession to come quick, go through it, and then move forward. You know, as entrepreneurs, as business people, as investors, as real estate professionals, nobody wants to go through a recession unless you're on the buying side, right? So we've been positioning ourselves to buy. But obviously, once we buy, scoop up, we want things to prepare themselves. Interest rates have been a shit show for all sectors of real estate, from residential to commercial, and debt has been extremely expensive. And so all of this has continued to get delayed. And so what we're looking at now, according to CBRE, is the fact that all of these, the delay in the recession is only going to push this out and the economic instability to the end of the year. But they are looking at seeing stronger stability as we move into 2024, which is what I've been talking about ongoing. Now, some of this is going to come at the right time, ironically enough, and some of it has to do with the election and what's happening with the 2024 presidential election. But I'll tell you guys that large corporations are pushing in regards to setting themselves up strategically. What is CBRE doing to fix this 57% decline in revenue? One of the big things that they're looking at right now is mergers and acquisitions. They just acquired a company that actually develops and specializes in senior living. And senior living being one of those industries that, with baby boomers at a retirement age, and as the Gen X population being as big as the baby boomer population, and as they're getting older, places to live for active adults and even adults that aren't active and in compromised health are a big growing need in this country. There's not enough of them. So that was one of their first mergers and acquisitions that took place in the first quarter of this year to help them out with the stabilization of what's happening financially. The second thing that they're doing right now is they're setting themselves up for next year. Very similar to what we're doing in multifamily right now. I've been talking about how, like last year, we had over $200 million on the books of development. And then as we moved into this year, we had almost no deal flow for the entire first quarter of the year. And then we finally started pulling new projects into fruition as we moved into the second quarter of this year, but still very slowly and very strategically. And when I say very slow and very just strategic, it's because we wanted cheap debt and we want to make sure that the developments pencil. And so one of the things that CBRE does is they do have a merger and acquisition and ownership in their own development firm. And they sell off a lot of these assets, which is what adds to their bottom line and their billions of dollars in revenue. And so one of the big things is that last year they had over $17 billion in new development coming into their pipeline. And then they halted, and then there's no development happening because debt was very expensive, very hard to get money. And now they're looking at $13 million of new development that's hovering. And they said, we have the opportunity to sit on this, and at our leisure, we have the ability to take it down and start developing it when it makes sense financially. So again, very similar to what we've been doing with our larger 30 million, 50 million and $60 million developments, where we're being strategic. Because if we can go in and carve $4 million of debt service off of a $50 million project because we wait 4 months, it's worth it because our bottom line is stronger, the project is healthier, we're leaner in the pocketbook, and so we're sitting in a position where we have more leverage. And when we have more leverage, we have less liability and the more opportunity for upside. So if you're an investor and you're listening to this right now and you're wondering, how do I position myself for my single family fix and flips, for my 4-plex, my 12-plex, my 20-plex, or if you're doing big development or even big purchases and acquisitions right now, and they're in the 10s, 20s, 30s, 40s, and 50s, and 60s, or hundreds of millions of dollars, you should be watching what not only we're doing, but the large institutional firms are doing, like CBRE. They pause for a little bit and slowly are anticipating a very strong and lucrative 2024 and 2025. And just like real estates, publicly traded companies are very similar. The only way you lose is if you're forced to sell in a down market. The only ones that lose are the ones that have to sell. Those that strategically position themselves to hold real estate, to hold stocks, and to hold on during a downturn market always win on the backside. And so one of the big things right now, ladies and gentlemen, is always position yourself with your purchases to hold them long term, because if you position yourself to hold long term, one of the things that you have is you have the opportunity for large upside gains. And CBRE right now is strategically positioning their $17 million of new developments that went for sale in the tail end of 2022, and the $13 million of new development that they have on the books for this year, to be able to slowly start unfolding to really make a large move as they roll into 2023 and 2024. Now, market sectors, guys, don't leave without this information. These are the market sectors that are pushing the downturn of a 57% decline in revenue for CBRE. Listen up. Now, if you like this content, you want more live content just like this, click and subscribe to our YouTube channel. So pound that thumbs up button and follow us for more content, more market updates, and more information, educational content in how to develop and build wealth through the means of passive residual income, multifamily, and commercial assets. Look, right now, the two biggest downturns in the economy is a 30% decline in office and a 10% decline in industrial. So all of you warehouse people out there that are watching this, pay attention. Right now, in spite of what's happening in the market and the need for industrial warehouse, there's a 10% decline in the national market and even in the international market sectors in industrial space. Now, they project that there's going to be a massive increase, and they're already starting to see a plateau and a slow migration in the positive direction. But be careful to the influx of industrial warehouse entering the market, because there has been close to twice the amount of industrial real estate that has entered the market in the last 2 years than it was on the market prior. And because of that, all this inventory is entering the market all at one time, bottleneck the industrial industry, and it's slowing down lease rates, and it's slowly tempering things down modestly, temporarily. They do see upward projections already sitting at a plateau and looking at upward projections moving into 2024. But as an investor, as a developer, as a builder, and as somebody that's just wise with their money, pay attention to what's happening in market sectors. Multifamily is about to experience the exact same thing that industrial space experienced this past quarter of 2023. We have more influx of multifamily, affordable housing, and Class A housing that's going to enter the market over the next 2 quarters. And it's going to be a bottleneck of at least 12 months, if not up to 2 years, of Class A assets that are going to enter the market all at one time. You can't just wave a magic wand and all these doors in the millions and thousands of doors that are just filled overnight. You have to slowly embrace the market and allow this inventory to get slowly absorbed over the course of time. Now, it'll take about 1 year to 2 years to absorb all the current inventory. And for you developers like myself, you have to understand that there is going to be a slight compression and a slowdown in the lease up. But the good news for us is that the stuff that we're finishing up now is going to enter into that same realm. We just got to get it stabilized because of the increased valuations from the time we started construction. We'll be sitting at a very comfortable place. We're not going to be knocking down home runs, but over the next 5 years, we're going to be set up in such a strategic way that we're going to knock home run profits in the millions of dollars on every single multifamily development that we're doing. And the stuff that we're barely pulling out of the ground now, just like CBRE is doing, we can strategically pull that out of the ground. And as we start getting that stuff out into the market in 2 years from now, 18 months from now, a lot of the absorption of what's coming out of the market today will be absorbed, and our stuff will enter the market at a good time where there's a recovery period where our stuff fills, stabilizes, and sits for massive returns. Right now, ladies and gentlemen, we knew this was coming. We know that there's still a mild recession to come, but the good news is that we're only months away from an upside projection of profitable returns and an upside in the real estate market. For more information, click below, follow our content, pound and subscribe to our YouTube channel, and I'll see you next time.